Welcome to the Accounting Standards for Insurance Contract session. Today, we want to present how Oracle can assist insurance company in the transformation that the new accounting standard require. I'm Gianmaria Meris. I'm Insurance Global Solution Consultant within Oracle Financial Services. And I'm very pleased to have with me today Churchill from the Product Management team.
Hi, I'm Churchill Gore, and I'm the Product Manager of Oracle Solution for IFRS 17 and LDTI. In the next few minutes, we try to give you a glimpse of the Oracle Solution capability to comply with IFRS 17 and LDTI. We also plan to share with you our experience with the insurers we are interacting with globally and the challenges posed by the industry as a whole. When we're talking to the insurers, there is a lot of commonality, and we've been in this industry for quite some time, and we've been traveling around and interacting with insurers around in different geographies. What we've been observing that there is a whole lot of commonality in the challenges that the insurers are facing, be it with respect to the data, the computation capabilities, or any other aspect. But primarily, everything boils down to the legacy system that the insurers are currently working with. This, in turn, is something which is posing a challenge with respect to the different granularities at which the insurers are required to come up with the data or the disclosures or the overall IFRS 17 requirements. With respect to the data, this is one of the key challenges and one of the prime discussions with insurers when we're talking to is around the granularity at which the cash flows needs to be generated. The IFRS 17 estimation needs to be done. This profit and the loss in terms of CSM needs to be generated. The disclosures needs to be done. There is a whole lot of discussions in and around that. Even with the terms of the aggregation criteria required by IFRS 17, both in terms of the onerosity or be the annual cohort, the minimum granularity, which the IFRS 17 talks about, it's not just limited to that set of granularity, but there are different other aspects where the insurers are looking with respect to the model points being generated in the actuarial system and the overall aggregation they can try to execute it to generate the IFRS 17 results is something which is of discussion still. With respect to the measurement approaches from IFRS 17, the IFRS 17 standard has, of course, bifurcated different businesses falling under different categories, be it from conventional GMM model or for participating products for the VFA or for short duration contracts with the PA. But still, there is a lot of discussions with the insurers. If you look at the non-life segment, then there is still certain uncertainty about the applicability of the PA model and the suitability of the PA against the building block approach. The insurers are still looking at the subjectivity of this topic and looking at different approaches of how they can and come up with the best of results. With the building block approach, of course, things looks more straightforward on paper, but when it comes down to the real implementation, things are challenging in that aspect. Considering the different rate curves, the investment insurance components coming into picture, the different financial assumptions to be bifurcated, the currency exchange rate, there is a whole lot of requirement. With VFA, of course, things changes in terms of approaches with the different types of products coming in. There is an overall standard set by IFRS 17, but end of the day, with respect to the granularities of the business, be it a unit linked or with profit funds, there is a difference in the calculation approaches to be incorporated, and that's something which insurers are still working out and looking at the details of the business. With respect to the reinsurance, that's again something which involves a lot of discussion, and insurers are still struggling to get the granularity at which the reinsurance held computation needs to be done, and considering there are certain amendments coming in which involves a one-to-one interaction with the underlying business. That's something which is again complex and also requires a whole lot of data. There is a whole lot of data requirement in that aspect of computation. Not just IFRS 17, if you look at LDTI, then within the LDTI standard, There is a different bifurcation between the conventional product, the market risk benefits, the additional liabilities, even the deferred acquisition cost. Those things get simplified, but end of the day, there is a lot of changes which the existing systems have been operating with. That there is a change in the approaches, and that's something which the insurers are struggling still to come up at par with others, or what the IFRS 17 deadline looks for. Once these computations, these aggregation criteria, these granularities are something which the insurers are looking at, there is a whole lot of disclosure requirements. And that's something obviously the IFRS 17 standard has already published. There's a whole sort of other, but also even the market with respect to the big fours have also come up with a detailed illustrative disclosures that the insurers are looking at. And that's something the insurers are also really interested to see how these numbers can be bifurcated, can be disaggregated into the roll forwards. And also at the same time, the granularities that the insurers are really interested, not just to meet IFRS 17 standard, but also into further analytical purpose, that the insurers are looking at this as an opportunity to look down into the breakage of these numbers. And that's something which now I think for insurers, this auditability and transparency really matters. And that's something which insurers are really interested in.
In fact, Churchill, in line with what you mentioned, data lineage and integration are additional key challenges for insurers. The new standards require a greater collaboration between accounting and actuarial. So it is key to enable a full transparency from the results available in the accounting reporting to the calculation rules applied and the source data used and provided by the actuarial function. And the openness to integrate with multiple different sources to ingest and manipulate data at different levels of granularity is also key. And finally, the new standards have several indirect impacts on a number of areas, such as tax, development of new KPIs, enhancement of the risk framework, and even remuneration and bonuses, but also a deep impact on the governance of data. So IT governance and support are impacted. In this slide, we wanted to summarize the overall capabilities of our solution. As you can see, the capabilities cover a number of different areas, not just the pure calculation of the liabilities based on the new standard. All of them are great accelerators for our customers in the implementation projects. So for example, number one, let's start with data management, which is a key demanding area that insurers have to address to enable the calculation of the liabilities. Leveraging on the underlying insurance-specific data model, the solution comes with a predefined list of data requirements so that insurers can have a quick start in the identification of the data needed for their calculation. We include a structured data model, logical and physical, with a separate staging area where we store the ingested data from sources. We can manage different levels of granularity till the highest detail, and we include capabilities for data collection, aggregation, or disaggregation. And this is fundamental considering we typically see that our customers do not have data at the proper level of granularity needed for the calculation. And the data model can become the unified source of data, not only for IFRS 17 purposes, but more in general for any other use case required by the risk, finance, and actuarial functions. The second block is related to the capability to define and control the overall process, from data uploading to accounting. In addition to the workflow available within the application, the platform includes a process management tool where process can be defined and monitored through a simple user interface. It enables to include controls, exceptions, and alerts. And this is key to enhance automation, which is fundamental when you have a very limited time to close your books at the end of the month. In addition, we provide capabilities in relation to reconciliation, data quality rules, and data governance, which includes security. And finally, you can create your portfolios of business in line with the requirements from the standards, aggregating through a simple user interface with no coding, similar shared risk products, and using multiple dimensions such as product, type, coverage unit, line of business, distribution channel. And we provide also capabilities to define the onerous classification.
And just to add what Gianmaria has been talking about in terms of the onerous classification, now if you look at the requirements of IFRS 17, that's one of the key dimensions of aggregation and bifurcation of your portfolio into smaller granularities is about the onerous classification. And the solution also boasts of doing this onerous classification within the solution capabilities and allowing the user to disaggregate their policies with it to their loss-making contracts, the profitable and with significant possibility of turning onerous. Apart from any of other standard requirements, the Oracle solution also comes with out-of-the-box calculation logics for each of the models for the GMM, VFAPA, and also for the LDTI solution for US GAAP. Now, when I'm talking about the configurability, the application comes with a standard IP with all the roll forward analysis capabilities already pre-configured within the calculation logics. But also, I think one of the key highlights of the solution is that the solution is not a black box, but rather the user can really see what these business logics are configured in the solution, but also to take care of the business nuances. And especially for IFRS 17, considering it's a principle-based standard, there are different nuances which can come up with different business needs. That's something the solution allows the user to make the changes in the standard configuration and meet the business need. Not just that, the Oracle solution also allows the user to make comparison between the different models, be it between the GMM or the PA, especially in terms of the suitability of the PA model. That's something which really assesses the users to meet the standard requirement. The solution comes with the configurability available in terms of the different coverage units for the CSM roll forward or for the loss component. That's something which is one of the another key highlights of the solution that comes up with. The solution also allows the user to make different comparisons of the different actuarial scenarios and to see the impact on the profit and loss statement or the entire roll forward of the movement analysis. That's something which the insurer can easily perform all these actions within the solution and with clear defined functional business rule. Not just that, which we also would want to highlight with respect to the reinsurance health capabilities, which is one of the critical aspects of IFRS 17, and one of the points which insurers are really struggling with is with respect to the reinsurance health, especially for the proportional treaties where there is a one-to-one interaction whether the underlying business is profitable or loss making. That's something the solution easily makes provision for the users to see exactly how the underlying business is performing and seeing the impact of the fulfillment cash flows on the CSM. If you look at point 4 of the attribution and the traceability analysis, the solution provides pre-configured and out-of-the-box profit and loss analysis that the user can view of the entire roll forward that has been done and the impact on the P&L statement, and provides a complete traceability and lineage of the source of the data that these results have come from. That's something which, again, I would just want to highlight that it's a solution which really boasts of, wherein we from end to end, the solution provides the user with the entire transparency of how that source data was generated in the system and what the end result was. If you look at the point 5, the solution comes with an integrated subledger, wherein the application provides out-of-the-box accounting events pre-configured with the results of the IFRS 17 analyzer, and have come with the out-of-the-box disclosure requirements to see the journal views and accounting entry, the GL account balances, and something which the solution comes with pre-configured and out-of-the-box rules available. lastly, I would also would want to mention about the forecasting capabilities of the Oracle solution with respect to the business planning and looking at how with respect to the changes in the assumption, how your CSM or your entire liability estimates are moving from one period to another. The solution comes with the capability to make the projections of your liability estimates and looking at how your profit and your CSM or the loss estimates looks in subsequent years with different frequencies and any number of years. The solution gives the user an edge in terms of the business planning, and that's something which is one of the key differentiators of the solution.
And now let's have a look to the value that the Oracle solution provides. Basically, the Oracle solution can be both the accelerator for your IFRS 17 and LDTI implementation, but also can enable a much wider finance transformation. So basically, we first of all provide a off-the-shelf end-to-end solution that covers from all the process, from ingestion to the calculation to postings and integration with your financial and accounting system. And it is configurable directly by the business users without any need to write code. So very easily to be configured. We provide also a lot of business content, and this is a great accelerator for you in your implementation. So for example, all the calculation rules to define the liabilities within the different methodologies are included, inbuilt within the solution, as well as many disclosure reporting which are required by the new standard. Also, accounting rules, we have out-of-the-box accounting rules included within the solution so that the calculated value and amounts can be posted into the proper accounts. Clearly, this can be extended based on your specific needs. In terms of data management, we provide data quality framework rules so that you can enhance the quality of your data. You can control the quality of your data, and through the process modeling tool, you can define once again through a user interface without coding, the overall process, the end-to-end process, and you can monitor the execution of the process and to be alerted immediately if any issue happened during the execution of the calculation. We mentioned the insurance data model. This is predefined to cover IFRS 17 and LDTI requirements. So this is another great accelerator for you to start with a well-defined list of data required, but clearly these can be extended to cover your specific nuances. And you can use also, as we mentioned, this data model and the data platform beyond IFRS 17 and LDTI for multiple other use cases for your risk, finance, and actuarial functions. And finally, the value is that you can have also a strategic approach to IFRS 17 and LDTI, leading to a much wider finance transformation. And the value of our solution is well recognized by the market. In particular, here you can see the report from Chartis Research, where our solution is positioned as category leaders both in as the accounting system solution for IFRS 17 and LDTI compliance, but also as a solution for data management and reporting solution. In addition to that, the value of the solution is recognized also by our customer. In fact, here we have highlighted a few of our customers who are a clear example how they leverage the value of the solution and the underlying platform. In fact, starting from a pure IFRS 17 compliance approach, they moved to a wider finance transformation and finance modernization, leveraging additional components of the platform. Let us start with Phoenix Group. In particular, this customer chose our solution, first of all, to comply with the new standard. But then they wanted to leverage the platform to approach a wider modernization of the finance function. Now they are leveraging the Oracle's integrated architecture, including the solution for IFRS 17, the Oracle Insurance Data Foundation, and Oracle ERP to address a full finance transformation project. They are leveraging the benefits of a cloud deployment and also leveraging on a modern finance reporting platform, enabling, for example, the reconciliation between IFRS 17 and Solvency II results. Chia Vita is an additional example. They selected our solution after evaluating different vendors, including the group in-house proposed solution and vendors working in the actuarial area. And also this customer wanted to leverage the wider value of the solution and platform, and they choose the additional engine that enables them to allocate costs and any financial element at the most granular level to be used for budgeting, forecasting, and to enable granular level analysis in terms of profitability.
As you can see that we have a presence globally and interacting with insurers in different geographies now for quite some time. We also bring to the table the expertise to provide a seamless compliance to IFRS 17 and LDTI and leverage these standards for a greater financial transformations for the insurer. Hope this short presentation was helpful to give you an overview of the solution. And in case of any queries, you can contact us on the contact given in the presentation. Thank you.
Thank you.